Some bullish data balanced out with some bearish risk. In this video, we're going to be taking a look at some smart money concepts, some Elliott wave theory, some on-chain data, and to kind of give our thoughts and opinions on whether or not this is the biggest bull trap in Bitcoin history. As I get into this video, if you find it useful and informative, smash that like button. I do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe? Tapping the bell and selecting all the notifications will keep you up to date with all the video updates that we do here at Cheeky Crypto. If you haven't yet joined us in Discord, guys, you are missing a trick. Check it out, linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there, so why not go ahead and check it out. Let's go make a start with this. There's a lot of things to discuss, everything through the smart money concepts, the bigger macro piece, all the way through to these kind of movements on Elliott wave theory at a smaller level. But let's go ahead and start things off by taking a look at the on-chain data, because I think this is a good place to kind of start. Top right-hand corner, we have the inflows, the outflows, and the difference between the two numbers. So we can see that we've had 2.3095 million going on to the exchanges and 2.2746 BTC, or 2.7, man, I'm really not getting my words out today. 2.2746 million BTC coming off the exchanges. So the difference between those two numbers is 34,920 BTC. This number is growing, and we can see that here on the 30-day average bars, as well as everything that's going on with the Bitcoin on exchanges. This typically would be seen as a bearish piece of data, and the reason for this is we have to consider why people are moving Bitcoin to the exchanges. You generally only move Bitcoin to the exchange if you're looking to liquidate that asset, and since this number has been growing, we should argue that actually there's a lot more people maybe now willing to part ways with their BTC, but it doesn't give you the full picture. So let's jump down into some more data. Let's go to the inflows and outflows line graph. Okay, the line graph basically shows you day on day the changes in the inflows and the outflows. And I've said this many times before, we look at these things as inflows being the supply of Bitcoin being made readily available to sell. And then you've got the green line, which is your outflows, which represents the demand, people soaking up Bitcoin, taking it off the exchanges. So supply and demand. Supply and demand are the metrics that basically drive price, and this isn't a perfect analogy because obviously these numbers do not represent true supply and demand, but they give us an idea as kind of what is going on. We can see that there's spikes to the upside with the red line. Essentially there's more Bitcoin going onto the exchanges, which is pretty obvious from the bigger macro number that we just spoke about, but 72,728 Bitcoin going on to the exchanges. I am not having a good morning when it comes to reading my numbers. 60,000 Bitcoin comes off the exchanges. So we can see that there's 12,000 Bitcoin more going onto the exchanges yesterday alone. Now, as we come up into the wallets, this is where things really get interesting, and something that I've been talking about for months upon months could potentially be starting to occur. And I say potentially, we'll see. I do think, and as I spoke about in this morning's video for Bitcoin, it does look like the price is being manipulated to the upside. And I'm going to go through what I think is occurring here. So let's start with the Bitcoin dust. Bitcoin dust are basically the lowest or the most vulnerable, I should say, retail investor, right? They hold anything really above 0.01 BTC, right? And there are a reasonable chunk of wallets here that have over 0.01 BTC. It's 11,668,173 wallets, but it has come down ever so slightly here. It's probably around 10,000 wallets or so has dropped over in the last 24 hours, which means 10,000 people potentially now sold 0.01 BTC, right? They just sold a little bit to it. And as I said, these are the most vulnerable. So these are the ones that are probably going to be the early indication of to what is going to occur. Essentially, they want to kind of come out of their positions because they need the money. And I think with inflation going rampant, I think that's likely to occur. And it'll be interesting to kind of see what the Fed do. All eyes are on the Fed. Because if they don't do 0.5, we're going to be in a whole world of pain in a year or two down the line. And I think that will be catastrophic for many as well. It does potentially give us a little bit more bullish time now, but it really is going to be a lot worse later if they do that. So anything less than 0.5, I think, is basically the Fed just, wimping out of what needs to be done. And they've obviously changed the metrics as well, guys. You can verify this on how they kind of are measuring inflation and all that kind of stuff over in the States. They're trying to make it seem like something else is going on, but they're not comparing apples with apples, and it's not a great look. Anyway, let's move on. As we go up into other retail-sized wallets, we can see that we've got Krill over 0.1 Bitcoin, Shrimps over 1 Bitcoin, and Dolphins over 10 Bitcoin. We can see now that there's a bit of a pullback when it comes to Dolphins. Okay, so these 10 Bitcoin or more wallets have decreased. Going from 156,118 down to 155,906. So again, we've dropped 100 or so wallets there approximately. So again, we're seeing a little bit of a shakeout here. We can also see that the shrimps did drop down, and as prices going up here, they're locking in some profits, it would appear. But they were selling on the low side. You can see here that they sold at a price approximately in 22K. Then at the top here, they start buying again at 24K and so forth, right? And this is a very typical retail thing that you see. They buy the pump because they fear that they're missing out on something, rather than buying when it corrects down, which is interesting. They always get it the wrong way around. You can also see very similar here that the Krill 0.1 Bitcoin or more sold at 22. And then they started buying up here at 24. So you can see that they're not doing it in the correct way, right? You're supposed to buy low, sell high, not sell low and buy high. But there's a typical retail thing. They fear that they're missing out on something, essentially. Now, when we go and flip this and we take a look at the larger size wallets, this is where things start to get really interesting. And that's that we've had a significant surge now to the upside when it comes to the whale-sized wallets. These are over 1,000 Bitcoin per wallet, and there are now 2,018 wallets. This, in contrast to where we were on the lower side, we can see was basically 2,002 wallets. Now, why do I think that this is interesting? I think this is interesting for a couple of reasons. One, we can see that there's a lot more Bitcoin going onto the exchanges. I think this is retail, basically looking to kind of come out of their positions. I could be wrong. It could also just be that whales are looking to start liquidating as retail continues to FOMO in. We can see that they've made a few mistakes there as well in the past, but it is interesting that we can see an uptick here with these whale wallets as that price is pushing upwards. They're buying at the low side and they continue to buy as it pushes upwards here. So the whales appear to be driving that push to the upside, which layers into what I was talking about in this morning's Bitcoin video when I was talking about the fair value gaps, the imbalances in the order books. It seems that there's a drive by institutional level investors, these billionaires, to push the price of Bitcoin to the upside. Ultimately, this could be compounded from banking issues in the US and all those kind of fundamental things that are happening in the economy. They could be causing this as well. But I do find it interesting. Normally, these kind of institutional level investors, they don't leave the fair value gaps behind and just continue to stack new fair value gaps on top of them. Okay, they want to be buying at the best possible price, unless, of course, they're incentivized to push the price up higher, only to make it a big bull trap, right? One of the biggest bull traps in Bitcoin's history, which I'm going to get into in a bit. So interesting stuff. We can also see the sharks here doing very much similar things, buying on the way down here into that low and then really riding this up. And these have done, these sharks, 100 Bitcoin or more wallets, they've been doing some fantastic trades recently. We saw them buying up massively in December before January, February, and all the fantastic run that we've seen so far. They've made a lot of gains. They've been locking some in, and I think we're going to see continuation of that in due course. So interesting stuff at the top level here from traders, but again, they're just trading Bitcoin's price. Interesting from the whales. They started to see a little bit of a reversal here, but I think it's only really been made possible because there are pockets of selling that are occurring at the retail level. Okay, but we cannot subtract or forget that ultimately things are bearish because more Bitcoin is being made available to us. And this is an artificial push upwards, I believe, by whale investors. Okay, so let's jump down into the charts and talk about why and what is going on. Starting with smart money concepts. Smart money concepts here. Bitcoin USDT on the daily. Okay, so the daily time frame, we've had a bullish change of characterization to the upside. Okay, so that bullish tail has now been confirmed with our closed position yesterday. Because we closed where we did, we've now got this reversal indication on the chart. Okay, now when we take a look at this, the first one of these that we saw was actually confirmed in May of 2022, down here, moving into those lows. We had the break of structure in November of 2022, and now we've reversed up, and we have a change of character to the upside. The only issue that I have with this is I don't think as I said before, it's a very natural move. But that being said, it does put some confidence in Bitcoin right now, okay? And again, we can see all these gaps that were left behind. It doesn't make sense that institutional investors will buy here, allow price to jump up and continue buying unless there's a narrative behind their actions. So be really cautious with that, because I don't think this is very natural in the way that it has been moving. Now, with this change of character, this is great. But normally when we see these, we do see price kind of retrace a little. Okay, so for example, we broke this, we then traced back up, and then we started to drop back down. Okay, so you can kind of see here, if I grab my pencil, that we broke our structure right here, okay, with this initial pull to the downside. We then retraced upwards towards our change of character and then broke back down. Okay, you do not move in straight lines typically. You can, it just doesn't normally happen that way. Okay, so when we see this and we see that we finally got our break of structure here and we've rallied up, the expectation should be that eventually we come back down, possibly to equilibrium, before we go up again, if we are to think super bullishly about this. The other thing that we have to bear in mind is we can, of course, come down lower than this. And if we come down lower than this initial low over here, let me grab my arrow, this one, this basically being the low of 19,549, then actually all you're going to do is reverse this change of character. It's going to then flip back to a bearish change of character. And again, that could be really interesting for us as well. Now, why do I think bear trap? Well, bear traps are, bull trap, because ultimately we are overbought on a lot of our stochastic RSIs, and these are problematic when we start thinking that we want to be bullish for a big move to the upside. Okay, so our on-chain data shows that there's more Bitcoin being made available to be bought, right? There's more supply up for grabs. That is also bearish, because when the supply outpaces that of the demand, you'll see price going down, unless of course the price is being pushed upwards from institutional level investors manipulating the price of Bitcoin, which I do think is what is occurring. So not only are we seeing low volumes coming through and the fact that there is more supply being made available to be purchased, we also see that the weekly, daily, 8-hour, 20-hour, 16-hour, 12-hour are all overbought positions on the stochastic RSI. And the stochastic RSI is super sensitive to price movement. We can stay up in the overbought area for a while, for sure we can, but at some point we do have to start to see reversals to the downside. And at the moment, we have yet to breach some of those higher areas, according to Elliott Wave theory, that will allow us to kind of be a little bit more bullish. And let's jump down into those. So at the moment, we're tracking this WXYXZ scenario, okay? And it's not a 5-wave structure down because we haven't met the requirements for 5-wave structure down. So we know it's not trending down in that sense. So the only way that this fits is a WXY and XZ. And this becomes invalid if we do push up higher than $32,917, which is definitely possible, as per my video this morning on Bitcoin. Now, when it comes to this, the other issue that I have is when we push up higher than that, we actually make things a little bit worse for us, because this could be something that we see from the Fed. For example, let's say the Fed decide to do nothing and watch the situation. Then the chances are the market's going to pump, although I think a lot of that is being priced in by these institutional investors, or potentially making you think that it's being priced in and to make you believe that price is going to pump up. But let's hypothetically say that there's no manipulation going on and price is pumping up because everyone believes that the Fed are going to do nothing or just do 0.25, right, and keep it basic. I think the market would pump under those scenarios, right? And if that's the case, then we potentially cross this $32,917 level. And for the most part, you think that's okay. However, that potentially puts us in a much more bigger bearish situation. We have this temporary bullish scenario, but we cannot ignore the fact that eventually we're going to have to come down. And if we do have this move upwards here, considering our positions on our weekly, daily, 8-hour, and by the time we actually get up there, probably the monthly as well, we'll be looking for a kind of mini bull market to kind of come to close and conclusion and ready to come to the downside. Not only are we not seeing the institutional investors ready to kind of come in, they would have to be looking at this from a much bigger bearish situation, which would be a big A, B, C structure, taking us down below $10,000. And that's why we don't want to necessarily do that. In an ideal world, all we want to do is we want to tap 14K and be done, and basically just finish off a Z wave, right? And if we can do those things and we can finish this off in a nice, neat way, then we can be bullish on the market. But until we see institutional investors coming in, and in a big way, because if I do bring back our original data here, we can see that they haven't really been able to participate. And this is because most of the Bitcoin currently sits with retail investors who were FOMOing in June because June was the bottom. They FOMO in November because November is the bottom. And I do kind of want to illustrate one of the key things about all these wallet counts. Whether you choose to believe it or not is entirely up to you. But we can see that every time that we've bottomed out here, the whales have been selling into whatever pump occurred after. So retail has been exit liquidity here in June and July and August. We then saw November, more of a downside movement with wallet counts. So if the bottom was in, why were the institutional investors leaving the space? It doesn't make sense. They would be buying the bottom, right? In that kind of massive amount of fear that was going on, specifically around November. But instead, we didn't see them buy, we saw them sell. And therefore, that makes me think that we have to go down lower if we want to see this big money coming into the space. So we can have all this stuff on the charts looking as bullish as we want, but essentially, I think it's being made to look a certain way. And not only that, we have to also acknowledge that these same individuals who are yet to enter the space in any significant way also own a lot of these media outlets that are happy to let retail investors think that we're in a really bullish state, while simultaneously moving the market in an upward direction to create FOMO. I think essentially this is a very big, if not the biggest, bull trap that Bitcoin has ever seen in its history. And I do think that there's going to be a rug that is pulled from beneath retail investors' feet. Now, coming back to this one, in fact, if, of course, the Fed do what I think they need to do, and they should do, which would be a 0.5 interest rate hike, then this here could be our supply zone where we start to see that drop to the downside. Now, hear me out. This particular area here is something that we saw in 2020. We pushed through it, we came down, we tested the higher range of this. We then rallied up to 65K. We came down to the lower side of it, again, testing this range. We then pushed up to 69K. We came down, we tested, we found it as support, a little bit of demand. We pushed up and then we lost it. This right now is a retest of the previous support levels or previous demand levels, and are they about to turn into supply levels and to turn into resistance levels? Okay, that is the interesting thing. And I think if the Fed do a 0.5 interest rate hike, that is exactly what we'll see. We'll see a massive downturn here. And again, that would then put us right back in play for a WXYXZ, and it would be a fantastic way to actually finish this bear market so that we can move on and become more bullish. Okay, but for now, to me, it looks like we have a very manipulated market. We have a move to the upside that I think is not sustainable. We've left a lot of fair value gaps in our wake whilst moving to the upside. We can see that there are more inflows than there are outflows, and it has been the case since January 2023. And ultimately, we're not seeing institutional level investors really coming in here. All we're seeing is retail investors trying to prop a market up, and that does not end well. Let me know what your thoughts are down in the comments below. Really interested to get everyone's thoughts and opinions on the data as they see it, and I'm going to leave the video right there. If you found it useful, smash the like button. If you're new, subscribe. Don't forget to join us in Discord, and guys, I'll catch you all in the next one.